This is the Female Flex, brought to you by spiritualvirago.com. Welcome to the Female Flex. I'm your host, Stacy Nichols, founder of spiritualvirago.com. Today we're going to be talking about alternative investments. And those are simply defined as any investment that's not a stock or a bond. So there's a lot of creative things in there. I'm also going to be specifically discussing alternative investments that are for what is called a non-accredited investor. And that simply means any investor who isn't worth $1 million. I don't know why this is a thing, but this is how the SEC works. They have certain investments that are available to this caliber of people and others that are not. Okay, so a non-accredited investor is someone that is not worth $1 million or did not rake in $200,000 in income over the last 2 years. So for the most part, a non-accredited investor is the average person. And alternative investments are cool because they give you a way to, diversify your portfolio and kind of invest in some cool stuff, I'll talk more specifically about the benefits of alternative investments in a second. But before I jump into all of that, I know you're probably thinking, why are we talking about investing on this, spirituality show or this female empowerment show? And there's so many reasons. I could do a whole show just on that. But I wanted to share with you guys that a recent study done by Fidelity tracked male and female investors over a 10-year period, and women on average are better investors. Our return was 0.4% more than the men. So if you're thinking you can't do this, it's intimidating, it's not for you, alternative investments are a great way to get into the market without having to get into the market. You see what I'm saying? Okay, so having said that, let's talk about some of the risks. First of all, alternative investments can be more complicated. They may involve higher fees because a lot of the maintenance of these type of things is going to be different than just simply running a stock. Higher risk level is also generally associated with alternative investments. One of the things that you'll read on almost all of these investment platforms' websites, if you start researching them, is something to the tune of, these opportunities are only available to investors who can afford to lose everything. Now, they kind of have to say that for their own liability and whatever, but it's not a bad general rule either. And finally, two more things. Alternative investments generally are harder to sell, to liquidate. So if you have an emergency and you need some cash, a lot of times an alternative investment is going to be locked away like a CD at a bank for 5 years, sometimes even longer than that. Now, for some, depending on how you work and what your goals are, that might actually be a benefit to you because you want to stash the money away. You don't want access to it. In other situations, maybe you do want that money to be liquid. So you definitely have both options when it comes to alternative investments. And then I just want to fully disclose, and I'm putting this kind of in our risk part of the talk, I am a blogger. I'm not a financial professional. All I've done is research these investments and put them together for you. Okay, but I'm not in any way qualified to give financial advice, and nothing I say, or if you look up the corresponding blog post with this episode, none of that should be construed as financial advice. Okay, so we talked about the thumbs down. Let's talk about the thumbs up of alternative investments. Like I mentioned before, it's a great way to diversify. And that basically means that when the stock market is doing this, and it's tanking, it's going down, like let's say the 2008 mortgage crisis, a lot of times alternative investments are completely unrelated to what's happening in the stock market. So for example, you buy, some classic cars. Well, the people that are in the market for those type of things, they still have money, even though the whole, economy is crashing. So the value of the cars isn't going to necessarily take a dip. You see, just as an example. So you're not dealing with the stock market's mood swings, generally speaking. Along with high risk often comes, of course, high dividends. You're going to get more for your money, generally speaking, if you can ride out the risk. And another thing I really like about alternative investments is that they tend to fit under the more impact or ethical side of investing. Almost all the big mutual funds are going to include, Exxon, military industrial complex type of companies. They could have cigarettes and guns. Generally speaking, alternative investments are not going to fit into that category of things. You're going to find stuff like real estate that isn't killing the economy, and it's not killing people and whatever. So the original blog post that all of the research I'll be sharing with you in this show, the original blog post is called 28 Vetted Alternative Investments for Non-Accredited Investors. And of course, the link to the full post with all of those 28 different investments is available in the description below. So what I'm going to do in this show, because going through all 28 would be a little bulky, what I'm going to do is just go through a couple of different shorter lists within that original post. Quickly as well, one thing I forgot to mention is that most financial experts and analysts, they recommend that you should devote 15-ish, maybe even 20% of your overall portfolio, so of your whole money, should go to alternative investments. Not necessarily just one investment. You can diversify within your alternatives, but that's kind of a loose figure. Okay, so in the blog post, I have all the kind of data for you to compare and contrast. I have historical returns, minimum investment to get started with any particular platform, and then the fees. So all those kind of like nitty gritty stuff is all in the blog post, but for what we're going to talk about today on the show, I'm not going to get into that much of the numbers stuff.
Hey, it's Stacy. Did you know that I offer speaking and coaching services?
Okay, so I want to start with 3 places where you can start investing right now, today, with $50 or less. So like no excuses. Anybody can do this, right? The first fund that you can invest in for less than $50 is called Ground Floor. And it's essentially crowdfunding for flipping houses. So crowdfunding is where, it's like OnlyFans, but instead of then your money is going towards flipping houses. I'm sure you guys are aware that flipping houses is a very lucrative industry. That's kind of common knowledge. So this gives like the average person the ability to get in on some of that on some of that house flipping action. House flipping, of course, can be very risky, so please consider that. The next fund you can get involved with for less than $50 is My Constant. And this is a peer-to-peer lending platform that is, wait for it, crypto collateral, which is pretty cool. We're going to talk more about crypto in a little bit, but My Constant allows you to basically loan money to other people, and it's going to be backed with cryptocurrency. And then the third fund you can get involved with for less than $50 that I wanted to share is Vaulted. Love Vaulted. They have an app, simple and easy to use, where you can just buy gold, and you can buy for like a few bucks. So if you got, a couple extra dollars left over after you made that payment or whatever, you can just quickly in your phone just buy a little bit of gold. And one of the things that to me is pretty cool about buying gold is that gold has actually historically outperformed bonds. And a lot of analysts are starting to think about buying gold as a sort of replacement for the bond section of their portfolio, or as a way to kind of diversify that low risk or bond section of their portfolio. So that's an interesting thing to chew on and think about. You might research that a little further on your own. And in the blog post, you'll find 12 more investments for under $50 that you can get started with under $50. All right, now let's talk about real estate. This is very exciting because this stuff was just not around a few years ago. I mean, legit, like these opportunities for non-accredited investors to get into real estate, like if you wanted to get in the real estate market 20 years ago, you had to have enough money to buy another house. That's just it. So now it's really exciting that now people that, don't have the funds to go buy a whole nother house or, commercial building or something can get in on real estate investing. So the first fund is called Diversity Fund, and that's spelled with a Y in there. But it's basically a large pool of properties that you can buy into. And the way that they're structured is what's called a REIT, REIT, that stands for a Real Estate Investment Trust. These are really common type of investment, the REIT. So Diversity Fund is cool because it's open to all investors and it's real estate. The next one is Fundrise. Fundrise takes, again, that same principle of crowdfunding and brings it to real estate. The other cool thing about Fundrise is that they have quarterly dividend payments. So a lot of the real estate investing, you're going to have to put your money in, and it's going to be like in a fund locked in there for whatever the period of the fund is. It could be a couple of years. So that's what makes Fundrise really unique, is that 4 times a year, you're going to see some of your interest, some of your dividends coming back to you. And then this one's really, really unique. This is the next one, my final real estate investment for non-accredited investors is called NICO, NICO. And NICO's cool because it's a public benefit corporation, which, basically it's like a nonprofit. And it's also a real estate investment trust, a REIT. And basically what NICO has done is they have purchased property in the Echo Park area of Los Angeles. And because they're a nonprofit organization, they can do things like improving neighborhood inclusion and boosting the economy. And they also have special benefits for residents of Echo Park who invest in the NICO fund. So that's really cool, particularly if you're interested in doing impact investing or ethical investing. And then in the blog post, I have 4 more real estate investment options. Okay, let's talk about cryptocurrency. Now, if you're like me, you kind of have this idea like the crypto crowd is sort of like the day trading crowd. It's like kind of frat boy vibe, right? Like it's just not my scene. However, a good friend of mine, his name is Chris, he just made a killing on crypto this year, and he really educated me about this is something anyone can do. It's not a boys club. And I'm like, And then also another friend of mine, Michael, too. He's kind of like a penny stock guy. He does some day trading, but he was telling me also, like crypto is really not that intimidating. And I feel like, to be honest with you, I'm intimidated. Okay, plus I'm just not sure. I'm like, there's always kind of this battle going on. Like, are you a gold person or are you a crypto person? I've always been more leaning towards the gold side of things. But to be honest with you, I think it really is time for crypto to have a larger audience because it's been around for a while now and it's got some crazy numbers, okay? So I wanted to share those with you. So Bitcoin is the most popular form of cryptocurrency, and Bitcoin's returns in 2020, okay, sit down for this, 302%. That's how much Bitcoin grew in 2020. In 2019, 87%. But this is the scary part, okay? 2018, Bitcoin was negative 72%. Okay, so it is volatile. No doubt about it. But super low minimum investments. So you can put in a little bit and see what happens, right? It's just another way to diversify. And these platforms make it pretty easy to transfer over some money. To transfer like US dollars into crypto. You could get it done in 15 minutes, start to finish.
Struggle to meditate? Visit spiritualvirago.com to get my free report, The Intentional Morning No Meditation Meditation, today.
And just for comparison, if you're not aware, typical stock market return is 10%. So when we're talking Bitcoin grew 302% in 2020, just to give you some perspective, okay? Now, in my blog post, I mention 6 different crypto investment platforms. And there's a whole bunch of cool stuff. There's one where you can actually roll over your IRA or your 401k so that it's in crypto, which is very cool. There's another one where they have like these automated investment templates. So there's 100, maybe 90. I know at least 90 different types of cryptocurrency. Bitcoin is just one of those 90 different ones. You guys might have also heard of Ethereum, which is another one that's gaining momentum. And anyway, so there's one of these crypto platforms. They actually have like an automated, you can kind of set up like rules and whatever. And they also have templates. If you don't have the foggiest idea what kind of rules, you can tell them I'm this risk level and these are my financial goals. And then they have like these templates that will automatically buy and sell based on the information you've input about yourself. So that's pretty cool. I mean, AI is definitely taking a place in investing. It's here to stay. So it's cool to see that coming together with crypto. And then another cool thing in the blog post, I'm not going to tell you today on the show. I want you to take a look at the blog post. I will also tell you if you are still super intimidated by crypto, but you're kind of like, maybe I'll put a toe in the water here. In the blog post, I tell you a way that you can invest in crypto without having to buy a single digital coin. And again, the link to the blog post is in the description. Okay, another thing in this particular blog post, I threw in as a bonus 3 alternative savings accounts. There's kind of this thing now that's starting to be more of a thing called Savesting. And I mean, really, this is a retaliation for the fact that savings accounts at banks don't earn diddly. Like diddly. I mean, pennies, right? And bonds aren't doing anything anymore either. So there's kind of these alternatives popping up, right? So one of them is called Concrete, and it's like REIT, like Real Estate Investment Trust, REIT Concrete. You see, we'll play on words there. And what's really cool about Concrete is that they have you have the option of getting weekly payouts on your money. And basically what their REIT does is it buys mortgages. And I mean, I don't know what your savings is paying you at your bank right now or whatever, but I guarantee you concrete is at least 5 times more than that. Next option for kind of alternative savings account is really cool investment called Worthy Bonds. And essentially, your money would be going into local businesses, to small businesses, but it's in the form of a bond. If you're familiar with bonds, government bonds are typically, they could also be investing in businesses. But the way Worthy is structured is a little bit different. And again, I can guarantee you that you'll be getting, I would say, at least 5 times more than what your current savings account at your bank is paying. Okay, and then our final alternative savings account, it's more like, I would say, a stash account than savings, because it's not going to pay any dividend at all, but it pays in like karma, okay? So this one is called Kiva Microloans, and it's really cool. It basically gives investors in, first world countries the opportunity to invest small amounts in like regular local people in the third world. So for example, when you go onto this site, you'll see, all the people that are looking to have their loan amounts invested in. And you might see, just again as an example, like let's say a recently widowed single mother of 3 in an African country, and she needs to borrow $100 so she can buy a sewing machine so that she can start alterations business from her home and support herself and her kids. That would be one example of, just a random example. But that's the type of thing that you would see on Kiva. So like 98%, I believe, of the loans are repaid, but you're not going to be getting any interest. The Kiva does charge interest, but it goes to the people that are actually like servicing the loans, like the people that are making the trips back and forth to these people's houses and doing the paperwork and getting things notarized and whatever. Okay, so I have saved the best for last. This is where I have the majority of my alternative investment money planted. And that is, drum roll, wine. This is crazy. I mean, yeah, okay, I like to drink wine, but the numbers on wine is insane. Okay, I mean, the crypto numbers are good, right? But check this out, okay? Wine outperforms the S&P 500, which is like an index that measures the stocks. It outperforms the S&P 500 by 1,000% over the last 20 years. All right. The general appreciation of wine in the last 10 years, 127%. Okay, so there are more than one way that you can invest in wine, and there are 2 different platforms I have, and those you'll have to check out in the blog post. Okay, and then to kind of wrap it up, in the blog post, I also discuss how you can get involved in investing in startups. So if you're a big fan of like Shark Tank, that's what they're doing. They're, kind of hearing these pitches from startup businesses and seeing whether they want to inject some cash in there. And it also explains kind of how your like stake in ownership, or are you loaning them money? There's some different options, and all that's discussed. Also, how you can invest in cannabis companies, how you can invest in rare art. And as always, you guys know I always include in my posts the shareable quote squares that you can throw up on your Pinterest or your Instagram. I hope this has been really helpful information for you guys. It took me a long time to research all these different funds. There's so many cool options available, a lot of alternative funds are coming out, and hope you can take advantage of something, find something that works for you. So again, thank you for listening. Really appreciate it. Any kind of like or share or follow is greatly appreciated. This is the Female Flex, and I'm your host, Stacey Nichols.
This has been the Female Flex. Please be sure to like and subscribe.